Ladies and gentlemen, boys and girls, welcome, welcome, one and all to Stock Dirty to Me. I am, of course, the podcast mogul Phil Better. I am always with. Oh, I forgot to change something in the background again. My bad. No, that goes there.
Damn
Hold
it,
on.
Phil. All right, we got
Amateur hour here. We
we
got
got
Tony Simansky from the Stock Bros podcast coming in. We are, of course, watching live from the Stock Better.
from the
Sorry,
Eiffel Tower.
we're on the Eiffel Tower. I don't even know where we are. Where are we again? Oh yes,
We're
we're
live from
on.
our houses.
Yeah, we're live from our houses, but this is the stock market for beginners. Loving all of this. Look at this. We got people from Ohio watching us. We got Kansas City. We got CT. We got some Canada. Woo, Canada people. Let me hear you, Timmy. It's from Canada. We got Kimberly from Atlanta over here. We're watching live. Kate, thank you for watching
Is
live.
anybody from Connecticut?
Do we have any? Isn't CT Connecticut?
Yeah.
Yeah, we got Mark Newman, a fellow Connecticut for you. There you go.
Mark, where
we
are
got.
you from? Where in Connecticut?
Where are you from, Mark? Let us know in the comments. We got who's showing up finally. Yes, Clisso Marquise is showing up to a live. Let's go. Arthur, always in the comments. Love it. Who we got here live from Illinois? Mikael, nice to see you. And Aiden, thank you so much for showing up. Always here. Remember, always hit us with some likes. Hit us with that love. Show us your support because without you guys, we can't do this show. So make sure you say hey. So we're going to start with some great news. It's been teased for some time, at least for me anyways. And if you're watching live, remember,
are you getting
pardon?
lips done?
I'm going to get my lips done. Yeah, it's finally happening.
Man. That's awesome.
Yes, I'm happy. Mark Newman again is live from CT. I don't know where CT is. I guess it's Connecticut. He doesn't want to tell us in case you're too close to him. But no, guys, we are on Apple Podcast. That's right. I'm about to put the link. Boom, baby. And it's going to be pinned to the top. But if you want to listen to us, it would be so beneficial if you guys can do us a big favor.
Yeah.
Go ahead.
And also subscribe to our email. We'll post it.
Hold on, I'll get that right now. I'll do that right now.
Well
you talk. I'm just going to jump.
We might as well get all the plugs out of the way. You can subscribe to the Stock Bros podcast because all week long, for those of you that have been following me, I've been putting out an episode every single day this week, and I'm doing a crypto mini series. So I think for the rest of this week and possibly a couple days next week, I'm going to put out an episode every single day talking about a different aspect of cryptocurrency. So for instance, I just finished one today talking about how safe is cryptocurrency. Yesterday's episode was talking about, God, I can't even remember now because I've done so many this week. But what was the last episode I just did? Now I have to look because it's going to bother me.
So I'll take you off screen and I'll start talking for now.
Yeah, go ahead.
There we go. Ladies and gentlemen, I just posted in the show, in the comments, and it's obviously if you're listening to this, you have the show notes. But in the show notes, you can sign up to our SendFox email list. It's a weekly email that we only do. We send you out a reminder that we're going live, but also you can subscribe to us on Apple, and we're going on to the other platforms soon. Spotify soon, Google, Amazon, all those are slowly rolling out. It takes time for them to improve us. But if you do listen to it on Apple, leave us a 5-star review. That's simple. Click on the link, go subscribe, hit review, 5 stars. Give us some love, showing us how much love you guys got in here. We just want this to be the #1 podcast regarding for investors, beginners. Anyways, Tony, what was the episode you did on?
Oh, so yeah, I did one about stable coins. What are stable coins? Which I guarantee 99% of the people in the group have no idea.
I can guarantee you right here, 50% of the hosts don't know anything.
How many cryptocurrencies there are, what their market caps are. I talked about why do people actually invest in crypto, some of the reasons. Talked about the meaning of crypto, where that came from, some of the origins. So anyways, check out that. I'll post the link for the podcast. I'll put one out every single day for the next week. So,
well, yeah, you have been posting quite a bit in the group and letting us know. Do you guys on crypto? I think some Arthur is asking if we own. I personally do not own crypto. I know Tony, I think you have a bit of crypto, but you do invest in coin change, right?
I use Coinbase. Coinbase is the largest crypto exchange in the US. probably the most reputable in my opinion. They have the best cybersecurity. I do own crypto. I only own Bitcoin, Ethereum, and Cardano ADA. So I don't have any
Ooh, look
crazy.
at this. Just at the same time, Charles
Yeah.
is going ADA is doing well as
Yeah,
well.
ADA is great. Those are the three I really believe in. Those are the ones I'm going to stick with because they have meaningful use cases, unlike many other altcoins. So, by the way, when I say altcoin, I talk about this in one of my episodes. A lot of people, we hear the term altcoin thrown out a lot, and many people have no idea what that means. Altcoin simply means alternative coin, and it's the alternative to Bitcoin because Bitcoin is the original crypto coin. So, when you hear altcoin, it just means alternative to crypto, basic or to Bitcoin. Basically, that's what it means. So.
I do know that we have Mark asking about Baba. I'm just currently in the going into our videos because I know it was our last video with Lloyd.
Last Wednesday.
Yeah,
we covered that.
Yeah. So Mark, you were there. No, wait, this is the wrong one.
Yeah, Mark, check out last week's show because we went in depth with Lloyd Ross.
Yeah, Money Millionaire.
Our millionaire investor friend. And he does have a master class. A lot of you wondering, like asking about how to break down stocks and how to evaluate them. And we talk about a lot of that, but he has a master class on that where it's a very couple hours course and it specifically talks about breaking down stocks and ways that he does it. So you can check out that. We'll post the link for that. So
and I just have to say, Lloyd is a client of mine for my podcasting business, and that's how I know him. And his podcast, Money Grows on Trees, I get to edit, and it is one of the best things about my job is I'm editing, learning from the master, a millionaire investor, guy who created side hustles, and then I was teaching other people how to do side hustles.
Yeah.
So getting into his master course about investing, I've been hearing some of his episodes, and if you saw last week's episode, you know how smart he is.
So
guys,
this is a guy that's almost $2 million portfolio
invested. Yeah.
So and
he started out like you guys, like us.
So and I'm scratching on 100,000 at the moment, trying to get to 100,000. So he's this is a guy that has a lot of credibility, and you can check out his shows as well. So.
Mark's asking us a bit more about some crypto. Is it too late to get in, or would you still jump in?
I don't know. I mean, a lot of people ask, like, is crypto, is it a good time to buy? Should I sell? I think crypto is one of those things that you just got to buy and hold it and ride it out for years and just forget you own it.
Because it took Bitcoin, didn't it take Bitcoin nearly 10 years before it got that spike?
So Bitcoin was the first coin in 2009. It didn't do anything for a couple of years, and then it shot up to like $20,000. And then it fell all the way back down to like 4,000, and it kind of hovered between 4,000 and 2,000 for years, and it did nothing. And then all of a sudden, COVID hit, and then boom, $65,000. So it's one of those things you just got to ride out the volatility because it is very volatile, and that's why I recommend keeping allocation of less than 10%. If you have 100 grand, probably don't put more than 10 grand into crypto because you're gonna see a lot of ups and downs. And if you're someone that's anxious and has some anxiety like myself, that kind of stuff would drive me crazy. So that's why I keep a lower percentage of my portfolio, very small percentage in Bitcoin.
Yeah. No, it's always wise, and something we've said countless times on the show, but also in the group when it comes to crypto. It's volatile. It's a long-term gain. It's not short term, so you can't always.
I do think it's going to be around. I do think some of them are going to be really great in the future. It's just stick to the well-known ones. And if you're someone, I don't know how old Mark is, but if you're young, if you're like 20 years old, then you want to take a shot and risk it, then, put 50% of your portfolio in crypto, go for it. But if you're someone in your 40s, maybe late 30s, it's probably more wise to be
conservative,
to be a little more cautious. But so Phil, I was looking at the list from last 2 weeks because I put out 2 separate polls, and one of the ETFs that got over 30 votes was TQQ.
All right, give me a second here.
Yeah, TQQ. I don't know how many people here are listening that are in, because I can't see the live count, but
We are at 10 live watchers here. This is for ProShare Ultra.
yeah, so TQQ is a leveraged ETF that is based on QQQ, and many of you know what QQQ is. I don't want to beat it to death. We've covered this so many times. QQQ is just the NASDAQ index. TQQ is a leveraged index ETF that tracks QQQ, but it does 3 times what QQQ does. So if QQQ goes up 10%, TQQ will go up 30%. If QQQ drops 10%, you're going to lose 30%. So a lot of people ask about this because it's done great. Look at the history of it. It's done really great.
Yeah.
But as long as we're in a bull market and things are going really well, then that's going to be a great ETF to hold. But if we have a couple bad years, it's going to be a horrible ETF.
Yeah, if we look over here, look, on February, just before the lockdown or just around the lockdown,
Yeah.
it was trading at 52, and then it dropped all the way to 17.
Yeah, so you're going to see huge, and luckily the market's rebounded so insanely fast that it recovered. Yeah. But this isn't usually how recoveries happen. Usually it takes 18 months typically to recover from a crash. So if you're someone that, like I said, this is one of those things, if you're someone that's 20 and you can wait 20, 30 years in the market, then yeah, this is probably a good ETF. But if you're someone that's older, it's a very high risk, and who knows what could happen in the future with a bear market. So this is something I would stay away from.
But so I have a question.
Yeah.
You've been dropping bear and bull market.
Yeah.
A bear market is what?
So a bear market is just a bad when we're in a recession or bad economic times, like the financial crisis in 2008.
So it's like the bear hibernates, the market has hibernation.
Bear just means we're on a downtrend. The economy's on a downtrend. We may be in a recession, financial crisis, maybe COVID, a pandemic. And a bull market is when things are going great. The economy is booming, the
roaring 20s in essence.
Yeah. So
then
and we saw the roaring 20s. The roaring 20s were actually the best decade ever for the stock market, other than the last 10 years. And then we saw the Great Depression, and that destroyed the stock market. And it took years for it to recover back to its all-time high, like 6-7 years. So you want to be smart about what you're investing in. And a lot of companies went bankrupt and never recovered. So TQQ could absolutely destroy you, or it can absolutely make you a fortune. So, you know what I mean? It's one of those
high risk, high reward, but also big falls. That's interesting. Yeah, no, I'm glad you brought that up. Yeah, I just was looking here. It goes from February 14th, Valentine's Day, right? The greatest day manufactured by man. Yeah. And then we go over to here, and it's literally July 10th. Not even a full February, March, April, May, June. It's not even 6 months.
Bill, it was the fastest recovery. It was the largest, quickest drop in history. In like a month's time, we lost 30%, and then it recovered in a couple months. It was the fastest drop and the fastest recovery ever in stock market history. So this is like a black swan event. Very unlikely that we're going to see a recovery like that ever again. So.
Now, Tony, I want to ask your opinion, because a lot of people in the group I've been seeing are worried about what's coming. Is the market going to crash? Yeah. And all that. Your opinion, someone who's been in the market relatively short, but you've studied economics, you have degrees in that, and you're doubling down on your knowledge for this podcast. What do you feel is the upcoming events? Like, not crystal balling, like on this date, this is going to happen. So, do you feel that we got a few years before we hit the fall, or are we just going to level off?
So I think a couple things. One, we're seeing something that we've never seen before, where the Federal Reserve is pumping the stock market like crazy, and they're doing a lot of quantitative easing. And because the dollar's not backed by gold anymore, we can just print money, and yes, it'll cause inflation, but over time, we're not seeing hyperinflation. We're already starting to see some prices come down in consumer goods. I saw gas is down a little bit. I saw the price of turkey meat is down a little bit. So we're going to see things come back. So we may get to a point where we may never see the market crash and stay down for years ever again because of our quantitative easing policy from the Federal Reserve. But I will say two things. Short term, we could see a bad month. September could be a really bad month because historically over the past, I think it was like the past 40 years, for whatever reason, September is always the worst month every year in the stock market. Why? I don't know, but that's just how it's been. There's some theories on it. I won't get into that, but
just letting Jackie man is saying hi, and so is Maria. Just wanted to get them up there before because I wasn't sure how long you were going to talk for.
I know. Yeah, I know that I'm not really giving you a great answer, but my answer would be that it's possible we could see a rough September. And I would say don't panic and don't sell and just hold what you got and ride the wave. Because last September I went through this where I lost like 10%. I'm like, holy shit. And then the September before it happened too. So you just got it all comes back. I mean, it came back really fast.
So you're suggesting people in September buy, forget about selling.
Yeah. If you have a good company, if you have stocks in a good company, just keep buying it. You know, but now long term, like you said, I do think we are going to see bear markets because there's always bear markets. And I do think those bear markets could last for at least a year, 2 years. So it's one of those things where don't invest money that you might need within 5 years. That's my rule. Don't invest money you might need within 5 years. If you do that and you stick to that plan and you have a savings account, whatever happens doesn't matter. Just ride it out. You know what I mean? So, but I do think that 2021, we're not going to keep seeing returns like this. I mean, the last 10 years have been insane. I mean, it's been an incredible, incredible bull market. The S&P's all-time highs every year, breaking records every year, every week seemingly. It's at a new all-time high. Yeah. So I don't think this is sustainable. I think once the Federal Reserve, so I should step back. I said quantitative easing, which I don't know if people know what that means.
Just give me 1 second. Mitchell is like September bad, time to buy more. Exactly.
So I'll quickly finish. What's been happening since COVID is the market's been being propped up by the Federal Reserve. They're buying ETFs and they're basically stimulating the market artificially because they're pumping hundreds of millions and billions of dollars into the market, buying it. So they're propping it up, and they're refusing to let it fall. That's what quantitative easing is. They're refusing to let the price crash again. So as long as they keep doing that and they slowly scale back on it, we're probably going to be okay. But if they decide that they're going to scale back in a large way and be like, all right, we're no longer buying anymore, then we could see a big drop initially, maybe 10, 20%. But it's nothing to worry about. We see crashes throughout history for hundreds of years. So the key thing is worry about what you're buying. Buy good stocks. So.
There you go. And if you're interested in buying good stocks, it's always great to be part of our email list where we tell you when we go live, we break down stocks that are good, bad, and anywhere in between. It looks like Maria's just letting us know her connection is messing up. Well, Maria, luckily you can always subscribe. Great segue. Look at that, to our email list or even to our podcast, which is live right now on Apple. It is the pinned comment at the top. Just click there, subscribe, make us some love. Leave us a 5-star review because you guys love us so much. We did. And if you guys want to leave us a review, hey, just put it in the comments. Tell us how great we are. We love hearing the feedback from you guys. Tony, is there anything else you want to talk about, or are we good to wrap up?
I think quickly we'll cover NVIDIA. It's the
didn't we do NVIDIA already?
Actually, we might have done a past video on that.
We did. We have some. I think this is
a couple chip companies, so it's hard to remember which ones we did. But
I'm gonna go back. I'm in the process of uploading all the video, all the audio, and I'll write down the list, and then
well,
we'll
here's the
put.
thing. It's easy. It's a buy. It's great. I mean,
There you go.
every quarter, its profits are up every quarter. It's great. Why would you? And obviously, we're in a chip shortage, and we can never have enough chips. Everything
No.
runs on chips now. So.
Thank you, Jackie, man, for telling us we rock. We love hearing that. Remember, if you're watching this live, hashtag live. Tell us where you are watching us live. If it's in your basement, if you're in your caravan, if you're at work. We know there's a couple of you guys who like to slock off at work and watch us and get your stock info.
You don't even have to watch. You can listen. Just
that's true. Now with the audio version, the audio version will be a few weeks back, so your info will be behind. But again, guys, we love your faces. Tony, anything else you want to plug before we leave?
I'm going to put my link for Acorns in the comments because I think it's one of the most smartest, responsible ways to invest for people that find this very confusing. They don't know what to buy. They're overwhelmed by all these different stocks they can buy. Acorns already makes an account for you, sets up a portfolio full of reputable ETFs, and you link your bank account to it. And anytime you buy something, they round up to the nearest whole dollar and invest that money for you. It's out of sight, out of mind. I've been doing it for exactly 1 year now in September, and I already have $5,000 in there.
Boom.
So just if you stick to it and you set up reoccurring investments, not saying that you're going to get $5,000 unless you keep putting money in like I did and buying things. But you can be.
It's a smart way of starting.
Yeah, you'd be surprised how quickly you can save up. So
at the same time, when you do that, doesn't Acorn give them a free stock?
Acorns will give you $5 invested into your account.
There you go. I also will be putting the link for our Canadian fellows. I know we have a few Canadian fellow Canadians rocking out. We have one similar. I'll put the link in. It doesn't invest it in stocks, but it does it into like one of the Canadian versions of stocks. I don't know.
And here's the great thing. Just set it up. If you're having a kid like I am, put $10 a week into it. Put your roundup investments into it from your purchases. 18 years from now, your kid will have 25, 30 grand. You know what I mean? So,
or even more, depending on how the market is and how much you more. Because the more money you make, you can always increase that amount you're putting into the account. That's the smart. Start small.
My girlfriend puts $5 a week in there. She's been doing that for a year now as well, and she has almost $1,000 in there from all her purchase roundups and just $5 a week. So
that's $1,000, and then the next year it's at $2,000. But then you're now investing with $2,000. You're not investing with $1,000, and it's just a compounding effect.
Yeah. So, and that Canadian one that you have is excellent for our Canadian friends listening.
Yeah.
Use that one for the Canadian version.
And of course, just to let you know, we do get a monetary amount back to us when you click on our referral links, but that's just you guys supporting us. It doesn't affect you at all because you're not paying us. The other guy is.
We each get $5 invested.
There you go.
You sign up, you get it, I get it, and it's great. We both win. So
there we go. So ladies and gentlemen, this is Stock Dirty to me. I am the podcast mogul, Phil Better. You can follow me on Instagram at podcaster Phil Better. He is Tony Seismansky. I'm probably destroying your. Did I destroy your?
Yeah, no one knows how to pronounce it. It's Shemansky. Yeah.
Shemansky. There we go. Yeah. I got at least the Mansky right. Close, it's the Shemansky that I get wrong. He is one half of the Stock Bros. He does a podcast that delves deep into the world of stock market, a little bit more deeper than this one. Plus, he's doing a daily podcast this week on crypto. Going forward, you guys can listen to him. And teaser, little spoiler. Tony's working on something very special for you guys in the crypto world. That's all I'm going to say on it, but also take his course or Lloyd's course to better your finances. I thank you so much for tuning in, and we wish you all a great day investing.